Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, sorry for the 2 week absence. Welcome back to Stock Shots. Of course, we're starting off with our favorite TSP fund. That's the C fund, aka the SPX, aka S&P 500. As you can see, we are still on a nice bullish trend going up. We came out of our trend line that was here over the last couple of weeks. Got a big rejection off of that 5100 area. And then we have been going on a rip, going up, up, up. So at this point, we are back to where we started on July 15th that week. So we're back there when the price started breaking down. Now we caught some good pushes up, but this time we are here. We are not breaking this last high of 56.71 there. So once we break that, it would be a question of, do we have enough volume to continue up? Now I want you to look here at the volume. The volume is decreasing. Our last candle had just slightly more volume than the previous week. All right, so here's what you should be looking for. Typically, for all of our for C and S funds, for the C and the S funds, what you may notice right now is that we may be building an M pattern. M is in for Mary. Now, the reason I say that is because typically for this time of the year, not an election year before, any other year, you would start seeing a breakdown in September going through October and then a rebound in October into stocks. All right. So, with that being said, I just want you to be wary. Even though this is an election year, you may get a continuation up. I'm still looking for this push up to at least get us to that 5,700 area. And the reason I'm saying that is because if I see that 5,700 touch and test there, I'm going to see that price action was previously here at that 5,600 area and 67 area, 56, 67. Now I have a 5,700. I'm going to look here at my indicator at the bottom to see if I have divergence at that point. If I have divergence, that's going to confirm to me that I may have a bearish move coming. And in the weeks, you don't know. Maybe the next 2 to 5 weeks. So right now, I'm still looking for the C fund to continue up, at least to the 5,700 area. And if we get past that, I'm looking for that 59.86. That's like way up there though. So let's see what we do here with volume. 5,700 is our next target. Let's look at the S fund. All right, in the S fund, here we go. We are in a channel. We broke out of our channel. Now, as you can see, I said probably a while ago, because I was out for 2 weeks. I had some things to do, did a quick little trip here and there on the weekend. I'm thinking it's going to bounce around in here and then break down. I have demand zones, I have a gap, I have a bunch of supports. All right. Now, with that being said, currently I'm up here yet again. It seems like when it gets to this area, this 2100 area, you start getting red rejection candles. Now I'm up in this area again. At this point, I don't have a very bearish look at it, but I do have a red candle here. It seems like all the action's on the top, and it didn't close below the candle of the previous week. It closed above. I personally want to see more price action. Do I have divergence already though? And if I look at my indicator at the bottom, I do. The reason I'm saying that is because currently here, my last peak height of upward movement was in the week of July 22nd, and that was 66.30 in strength. Currently, I'm at that same exact level, and I'm at 61.99. So there's slight divergence here. So I'm leaning towards a bearish entry to look at when it comes up. And once again, Any other year, if you're in September, you see bearish entries start to form in a lot of the stocks until October. Then the end of October, maybe the second, third week, you may see a push to the upside starting. All right. So just putting it out there. Do your history. Look back. You can back test this. You'll see it. And then do election year. See what happens when you look back on election year. So currently, I'm looking forward to at least break that 2205 area. Let's go to that international fund. International fund is getting it. All right, it's going off to the races. International fund has been going up for 4 weeks. Now this one closed above the last week's high, so yippee yippee. So let's look for that 85 area. Currently we are out of this area here. So I was looking at this 8209 as an area where we had to break it and do it with good volume. So we did it. Our volume is increasing in the international fund. So at this point, you may see that push to the 85.21 area, still in a good bullish trend. Now we do have a small, let's put it right here. There we go. A small area that is a gap in between the $80 range. So in between $80 and 70 something cents. So it's not going to be exact, but it's pretty close. $8.70 to $8.30. There's a little gap there. So if price starts to move backwards, I would look for it to fill that area as a target. All right. So if we keep doing this, let's keep looking for that 85.21. So let's look at the aggregate bond fund. Aggregate bond fund. Okay. So we are. Whew, that bond market is still going up. It hit our target of $100.09. I'm happy with that. Right now we're hitting some rejection. If you notice, we are supposed to get some rate cuts coming in September, which is this month, in the middle of the month. This is definitely going to have an effect on the bond fund. We have hit our target here. So if you were in the F fund, you probably made your money. You probably want to get out at this moment. For this one, I'm going to turn my indicator on because I'm not going to just go off of me. I want to see what it is. I'm still in a buy zone. I'm hitting this first target area. If we get less than expected for the cut in the rate, you're probably going to see the bond market go up again to probably this 103 area. So if you're looking for hanging around a little bit longer in that international, sorry, in the bond fund, the F fund, that 103 is probably going to be where you want to get out at. And I had this already marked up too. So yeah, $103. Currently, most of the markets look like they're going up. So keep them going, let them ride. And when you see that confirmation of a bearish signal, that's when you want to start putting into either the international fund, if you're not already there, maybe the bond fund, depending on how it's doing based on the news that we get, or the good old-fashioned G fund. You can't go wrong with that. So thanks for watching. Sorry for the 2 weeks off. I had some stuff to do, did it, and I'll see you next week on Stock Shots.